Good morning, my dear students. Today we are going to continue with our existing chapter, that is accounting for company, where we are learning about accounting for shares. Okay, there are two parts in company accounts. One is accounting for shares, another one is accounting for debentures. Today we are going to learn accounting for shares, and in that we are going to take up a situation where there will be issue of shares at par. Okay, we know par means what is the value, whatever the face value is there, at the same face value we are issuing to the public, also selling to the public. So that is issued at par. Okay, in addition to that, we will get cash book with cash book as well as balance sheet. Okay, and balance sheet is the balance sheet, right? So this is very very important, balance sheet, right? Okay, so let's start. Now, the question is like this: Unique Pictures Limited was registered with an authorized capital of rupees 5 lakh. Okay, this is the authorized capital, means the company has got the authority to issue it, right? So this is the authorized capital. Divided into how many shares? Divided into shares of 20,000, and it is a it is a 5% preference share. You must have studied in class 11 that there are two types of shares. One is equity share, the other one is preference share. In the previous day's video, we have seen about the equity share. Today, we are talking about the preference share, right? So 20,000 was the number of shares, and 5% preference share is the name of the share. This 5% is nothing but the dividend rate which the preference shareholders will get from the investment that they have made in the company. Okay, out of the profit, they will get 5% of their investment. Whatever investment they have made, and out of that 5% they will get. Okay, the face value of the share is rupees 10 per share. And what has happened? And 30,000 equity shares of 10 each. There are two combinations. Okay, one is the preference share, the other one is equity shares. So let's see once again what is there. The unique picture limited was registered with what? Authorized capital. What is the authorized capital? Authorized capital was 5 lakh, and it was divided into two parts. One is 20,000 5% preference shares, right? And of rupees 10 each, right? Of rupees 10 each, and the other one was 30,000 equity shares of rupees 10 each, right? The other one was 30,000 equity shares of rupees 10 each. There are two groups. So one is 30,000 equity shares of 10 each, other one was 20,000 5% preference share of 10 each. The company has issued 10,000 preference shares. Okay, 10,000 preference shares were issued, right? And 15,000 equity shares were issued, right? There are two parts. One is preference share. The preference share is 10,000, and equity shares are 15,000 for public subscription. Calls on shares were made as under. See how it was made: application, allotment, first call, second and final call. All the calls has been made there. So what is given here? Equity shares. In case of equity share, what is happening? Equity shares, rupees 2 on application, rupees 3 on allotment, rupees 2.5 on first call, 2.5 on second and final call. In case of preference share, what happened? Application 2 rupees, allotment 3 rupees, 2.5 rupees in the first call, and 2.50 in case of second and final call. So this is how we are going to raise the fund from the public. Now coming to the next one, what is given below there, all these shares, okay, all these shares were fully subscribed. So there is no problem of over subscription, under subscription. It is a situation of full subscription. After that, all the dues were received except the second and final call on 100 equity shares and 200 preference shares. Okay, we all the money were received except in case of the second and final call. What has happened in the second and final call? There were 100 equity shareholders who did not pay the money, and there were 200 preference shares. Okay, 100 equity shares and 200 preference shares who did not pay the money. Okay, so that is what is called. What do we call it? That is calls in arrear, right? That is called calls in arrear. Then coming to the next one, what is given here? Record these transactions in the journal. It's told that we have to put in the journal. You are also required to prepare the cash book and the balance sheet. Yes, we have to prepare the cash book and the balance sheet. Now remember one important point: when, whenever, okay, whenever the cash book, whenever the cash book will be prepared, Okay, whenever the cash book will be prepared, remember that the all the transactions, okay, all the transactions related to cash or bank, okay, all the transactions related to cash or bank, what will happen, will be transferred to cash book, okay, will be transferred to cash book, and no need, remember, okay, no need to pass the entry of cash transaction. Okay, remember, all the entries will be going in the cash book related to cash transaction, so it will be obvious that we are not required to pass the entries for cash book separately. Okay, for the cash entry separately, cash के लिए अलग से entry करने की जरूरत नहीं है. Remember that whenever whenever the cash book is prepared, all the transactions related to cash will not be passed through journal entry, rather it will directly go to the cash book. ठीक है, उसका पार्ट अगर है साइड में तो वो आएगा, रिमेनिंग पोर्शन विल कम, बट रिलेट टू कैश इट विल नॉट कम, राइट. सो दिस इज अ वेरी इंपॉर्टेंट पॉइंट, रिमेंबर दैट. मतलब कैश बुक बनाने का मतलब ये है कि कैश ट्रांजेक्शन का जर्नल एंट्री नहीं देना है, वो डायरेक्टली कैश बुक में चला जाएगा. ठीक है, so let's start. So as I told you, we have to start with application first. So it is already told that all the shares are fully subscribed. So pehla problem solved. No problem in that. So now we know that application is 2 rupees, and in case of equity, and in case of preference also 2 rupees. So what is the journal entry? We have received a full subscription. So how many shares have we issued? The company has issued 10,000 preference shares and 15,000 equity shares. So 15,000, we have to see one by one. The journal entry will be like this: bank account debit to equity share application account. Okay, there are two groups: equity share application account and two preference share preference share application account. There will be two application, there will be combined entry of two application, one that you are receiving on preference share, another we are receiving on equity shares. So it will be bank account debit. Earlier it was two equity share two equity share application account. Now there will be two entries: bank account debit, two equity share application account, two preference share application account. Okay, so that will be combination of two. And how many shares are there? That is 10,000 preference shares and 15,000 equity shares. So for 10,000 into 2, preference will be 20,000 rupees, and 15,000 into 2 application, that is for equity shares, it will be 30,000 rupees. The total comes to 50,000 rupees. The entry will be like this: bank account debit 50,000 to equity share to equity share application account. How much? 15,000 into 2, 30,000, and to preference share capital account 10,000 into 2, 20,000. So it is like this: equity share application account debit. Just a minute, okay. Okay, so as I've already told you that all the bank entries will be going to the cash book. So the general entry was bank account debit, right? To bank account debit to equity share application account. How much? 20,000, 15,000 into 2, that is 30,000, and to 5% preference share application account 10,000 into 2, 20,000. So this is the entry. So you can see that the bank entry is not coming in the journal entry, it will come in the cash book. Okay, that means what was the entry? Bank account debit. That is, we are going to take it as a bank column, right? The bank column. So bank account debit, so it's coming in the debit side as two equity share application account. In case of equity share, 10,000, sorry, 15,000 into 2, 30,000, and two 5% preferential application account, 10,000 into 2, 20,000. Right? So this was the application receive entry. Then that will be a transfer entry. In case of transfer entry, we know what is the entry. It is equity share application account debit. Okay, then 5% preference share application account debit to to equity share capital account to 5% preference share capital account, right? So there's no bank, so directly it will be shown in the entry as equity share application account debit 15,000 into 2, 30,000, 5% preference share application account debit 10,000 into 2, 20,000, two equity share capital account 30,000, two equity share to 5% preference share capital account 20,000. What has happened? Being transfer of application money, okay, being transfer of application money to share capital, okay, both equity share capital as well as 5%, okay, 5% preference share capital. Then comes the next entry, that is on allotment. The allotment in case of equity, it is how much rupees? 3 rupees. And in case of preference also, it is 3 rupees. Right. So what will be the due entry? As we know in the previous video also, I told you, in once the application is over, then it comes, the process begins with the due entry first. So when it comes the due entry for allotment, what will be the entry? The due will be made on obviously received one, right? So it is 10,000 and 15,000. So in case of that, what will happen? What is the due entry? Equity share allotment account debit 15,000 into 3, because 15,000 were the equity share, right? So equity share allotment account debit 15,000 into 3, 45,000. Then 5% preference share capital account, the 5% preference share allotment account 10,000 into 3, that is 30,000, to equity share capital account 15,000 into 3, 45,000, to 5% preference share capital account 10,000 into 3, 30,000. So you can see here equity share allotment account debit 45,000. You can just take a two parts. See, equity share allotment account debit 45,000 to equity share capital account 45,000. This is what we have done in the previous video, right? In addition to that, we have got preference share. So in addition to that, we will put the preference share also. This time, how it will be done? 5% preference share capital, sorry, 5% preference share allotment account debit 30,000 to 5% preference share capital account, right? That is the thing. Only you have to combine it. Okay, clear? What is the narration? Being the amount due on allotment. Okay, being the amount due on allotment. Now let's go to the next one. There is the allotment receive entry. Now we have already seen that the problem was in case of first, second, and final call, right? Second and final call, there is a problem, that is a arrear. Other than that, there is no problem. So directly we can receive the allotment money. The entry will be obviously bank account debit to equity share capital account to 5% preference share capital account, isn't it? Amount we have already seen. And we know that the bank entry will not be coming in the journal entries, rather the bank entry will not come in the journal entry, rather it will go in the cash book. So in directly going to the cash book, what will be there? Cash book debit side to to equity share allotment account 45,000, 15,000 into 3, to 5% preference share allotment account 30,000, 10,000 into 3, right? So this is how it will come. Okay, this is how it will be placed. So after this, what will be there? It will be first call. Now this question is looking quite similar to the previous question, but this is important because the combination of both preference share capital and equity share capital is there. In addition to that, you are learning here about the cash book. Okay, and also you will be learning about the balance sheet. Let's see now one by one. Okay, so now comes the first call. So when the first call will be due, what will be the entry? In case of first call being due, the entry will be like this: equity share first call account debit 2.50 into 15,000, right? Clear? That is 37,500. Okay, then 5% preference share. Okay, 5% preference share capital, sorry, 5% preference share first call account debit 10,000 into 2.5, that is 25,000, to first to equity share first call account to 5% preference share. Sorry, in case of transfer entry, it will be one by one. Let me repeat it once again for you all. First of all, it will be equity share first call account debit 15,000 into 2.5. That will be something near about 15,000 into 2. That will be 37,500. Okay. Then again, it will be for preference share 5% preference share first call account debit 2.5 into 10,000. That is 25,000. To first of all, it will be to equity share capital account 37,500 to 5% preference share capital account 25,000. Okay, 25,000. So let's see how the entry will be placed. Equity share first call account debit. Okay, this is nothing but 25,000. I'm just show you here so that you can understand. It's 15,000, right? 15,000 into 2.50. Okay, 15,000 into 2.50. Here, both the cases the amount is same, right? And in case of allotment, sorry, in case of first call of preference, the amount will be same, right? There is per share it is 2.50, but the total amount will be different, 10,000 into 2.50. 2.50. So it is coming 25,000. Okay. So equity share first call account debit 37,500. 5% preference share first call account debit 25,000. Two share first call account 37,500. 5% preference share capital account 25,000. If I repeat and if I explain you individually, then it will be like this: equity share first call account debit to equity share capital account, and again 5% preference share first call account debit to 5% preferential capital account. Okay, individually. And what will be the narration? Being first call money due. Okay. Now coming to the next one. Coming to the next one, what is there? Will be the receive entry. So we already saw that there is no problem in case of application allotment. Obviously, an application generally doesn't have anything, and allotment and first call also is not having any issues. Only the problem is there is the preference share. Okay. So what happens is that what we are going to do, we are going to receive the money now. So in case of receive entry, we are going to receive full amount. So it will be bank account debit to equity share bank account debit to equity share first call account, and again to 5% preferential capital, 5% preferential first call account. Okay, so it will be directly placed in the cash book as to 5%. First of all, to equity share first call account 37,500 to 5% preference share first call account 25,000. Okay, this is how it will be placed. Clear? Now coming to the last part, that is second and final call of 2.5 and 2.5. So there will be no problem in case of making it due. Don't think that they have not paid the money, so I'll make it, the due amount will be less. No, at the time of making due, the total amount will be taken. That is 10,000 into 2.5. That is in case of preference share, and 15,000 into 2.5 in case of equity shares. Okay, so the journal entry will be like this: equity share second and final call account debit. How much? 15,000 into 2.5. So it will be 37,500. Then 5% preference share second and final call account debit 10,000 to 2.5, 25,000. Two, equity share capital account 37,500 to 5% preference share capital account 25,000. Okay, so this will be the entry in case of second and final call. Equity share second and final call account debit 37,500 to equity share capital account 37,500, and again 5% preference share second and final call account debit 25,000 to 5% preference share capital account 25,000. Okay, this is how it will be placed. Clear? I hope all of you have understood this entry. Okay, now what we are going to do, narration. Being first call money, being second and final call money, it will be second and final call money due. Okay, being second and final call money due. Right? Now comes the receive entry. In case of receiving the money, I'll just show you the workings. What is that? 100 equity shares has not paid and 200 preference shares has not paid. Now let's find out the call scenario. That will be the easiest way to find out. We know what amount of money we are supposed to receive and how we are going to do. So I'll show you here. It will be very, very easy for you all to understand. I'll show you here also. It will be easy. There's no problem. Now let me show you calculation of calls in area. Okay, calls in area calculation. So see, on equity shares के ऊपर क्या होगा? How many shares are there? In case of equity share, it is how many shares? 100 equity shares, right? At the rate rupees 2.50, right? So how much it is coming? 2,500. So 250 rupees. And on preference shares, How much rupees it is coming? 200 into 2.5. So how much it is coming? Obviously, it is coming 500 rupees. Right. So this is how it will be placed. I hope all of you have understood it. Okay. This is how it will be placed. That means total cost in area is very, very clear now. The cost in area is how much? 250 in case of equity share and 500 rupees in case of preference shares. So I'll just show you the journal entry here because there's a receive entry, so there will be bank entry, right? And bank entry we are not going to show in the journal entry, so I'll just show you for your understanding. Journal entry will be like this: bank account debit, bank account debit. How much money we are supposed to receive? I'll just show you here. Was the amount was in case of second final call, how much? 37,500 and 25,000, right? So individually also you can do, or totally you can do 25. It was how much? Let's see. One by one, if I say, it was 37,500 in case of equity share and 25,000 in case of preference share. So one by one also you can see, in case of 37,500 rupees minus 250. Okay. In addition to that, we have got plus again, what is the combination? 25,000 rupees in case of preference minus how much? 500 rupees, isn't it? So the total will be totally different. What will be the total? It will be a total. Okay. So the total will be how much? It will be 37,500. It will become 37,000. So it comes to 50,000. Then another 12,000. So 62,500, right? 62,500 minus 750. So 62,500 means if we deduct 500, so it will be 61,750 rupees, right? We're going to receive, isn't it? So, two on equity, how much? I'll write in short. How much we're going to receive on equity, right? Two equity, how much we're going to receive? On equity, we're going to receive how much? So, it will be, in case of equity, how much it will be? 37,500 minus 250 means 37,250 rupees, right? And in case of preference, how much it is coming? It will be 25,000 minus 500, that is 24,500 rupees. Okay. So the journal entry will be, in addition to that, we have got one more thing. This is the amount of money what we are going to get. Okay. Don't get confused. The journal entry. This is the amount of money we are going to get. Okay. I'll just correct it. So this is the amount of money I'm going to receive on equity, and this is the amount of money I'm going to receive on preference. The entry will be like this: bank account debit 61,750, calls in area account debit. The calls in area is how much? 750 rupees, right? Two equity shares, second and final call. Okay, second and final call account, the total amount. Okay, that is, what is the amount? 37,500 rupees. I'm just mentioning the exact amount, the correct entry now. Okay, otherwise it will be again a confusing thing. Now I'm mentioning you the total entry, correct entry. So this is how it will be placed. Yeah. So two preference share will be how much? 25,000 rupees. So this will be the journal entry. Here you can see why I have given this entry, because of the thing that you have to understand here a part of the amount, a part of the entry will come in the cash book and another part will be followed in the journal entry. So this bank portion I have shown in the previous situation also. In case of this one, how much was the amount? 35,250 in case of equity. And in case of preference share, it was 24,500. Why I showed it? Because of the reason that you are going to split it up. Okay, try to understand. In case of equity share, how much you have received? There is an area of 250 rupees, right? In case of equity, it's the area of 250 rupees. So how much have you received? 37,500 minus 250. That means you have received 37,250 rupees, isn't it? You have received 37,250 rupees. So what is the area? The area is 250 rupees. Okay. And in case of preference shares, in case of preference share, the amount is 25,000, right? So out of 25,000, 24,500 you have received, because how can we say? Because in case of preference share, the area is 500. So in addition to that, the area is 500. Remember that this particular example will help you to understand the situation nicely. Okay, otherwise it will be very difficult for all of you to understand. So this is the portion of that, right? So once it is clear, so what you can what you can do is that we can go for the journal entries. Now in this situation the journal entry will be only for call area, because बैंक का तो entry चला जाएगा cash book में. So क्या होगा? journal entry call area का call area account debit 750 to इक्विटी शेयर सेकेंड एंड फाइनल कॉल अकाउंट कितना है एरियर 250 रुपीज टू प्रेफरेंस शेयर सेकेंड एंड फाइनल कॉल अकाउंट कितना है एरियर 500 रुपीज understood. There will be multiple part. I'm repeating once again here. Calls in arrear account debit, the total calls in arrear, that is 250 plus 500. Okay, in case of equity share it was 250 rupees, in case of preference shareholder it was 500 rupees. Okay, this is how it will be placed. Clear? ये वाला जो पोर्शन एरियर वाला, इसको मैं रेड मार्क कर देता हूँ ताकि आसानी से समझ में आए. ठीक है, रेड कर देता हूँ तो उसे एरियर पता चल जाएगा. इन एडिशन टू दैट, ये इसे छोड़कर क्या है? और इसे छोड़कर और भी कुछ है. क्या है वो? इसे छोड़कर जो रिमेनिंग पैसा मिला उसका एंट्री होगा. बैंक अकाउंट डेबिट मतलब कैश बुक में होगा. क्या होगा? बैंक अकाउंट के डेबिट साइड में इक्विटी शेयर second and final call 37,250 and two preference share second and final call account 24,500, right? So देखो क्या होता है, कैसे होता है कैश बुक में. two equity share second and final call 37,250 and 5% equity 5% preference share capital sorry 5% preference share second and final call 24,500. ओके, यहाँ पे और कुछ नहीं करना है, सिर्फ बैलेंसिंग कर देना है. इसी के लिए इधर बैलेंसिंग करके बाई बैलेंस क्रेडिट डाउन आ गया है 2,49,250. दोनों तक बैलेंसिंग हो गया बस. ठीक है, बस जनरल एंट्री हो गया, खत्म. ओके, यहाँ तक होता है जनरल एंट्री. ठीक है. Now we will go for the preparation of balance sheet. Now try to understand how the balance sheet is prepared. It will be a little confusing because today for the first day we are going to do the balance sheet. So let's see the balance sheet once again. How the format looks like. This is the format, general format. Okay, I will explain you this format in details in the subsequent chapter, because there we have to discuss in detail. Okay, at the time it will be clear also. Now try to understand. First of all, you have to start with the equities and liabilities. Okay, the format is totally different. So in equities and liabilities, under that we get shareholders fund. I'll just explain you orally here, because this particular part will be clear when you go for the financial statement of company. Okay, then only it will be clear. So for time being, I'll just give you a quick note on that. So equity share equities and liabilities will be a part, and the other one is asset. Okay, so in equities and liabilities, first of all, we start with shareholders fund. Just remember that in case of shares, it's not very difficult one. It's only extract a limited portion. Okay, so equities and liabilities, shareholders fund. Under that, you got share capital, which will be showing in the note number 1. So we'll go to note number 1 now. Here you have to make the note to account. Okay, in note to account, you have to make note number 1, share capital. Under that, as I already told you in the previous day, that you'll be starting with authorized capital. What was the authorized capital? 30,000 equity share of 10 each, 3 lakh, right? And 20,000 5%. Okay, 20,000 5% preference share of 10 each. How much? 2 lakh rupees. Okay, so it is coming, the total comes to 5 lakh. Okay, after that, issued and paid up. Issued capital, issued and paid up capital. Okay, so issued and paid up capital. In case of issued and paid up capital, what are you getting? In issued and paid up capital, we are getting 15,000 equity shares were issued, right? 15,000 equity shares were issued of 10 each. So 1,50,000 and 10,000 5% equity shares, preference share were issued as a 10 each. How much? 1 lakh rupees, right? So this was the amount, 2,50,000. Okay, I'll just make it up again. Issued capital only, because paid up we can show it later also. That will be under separate heading here. Now let's come to the next one, that is subscribed capital. We have got 4 parts: authorized capital, issued capital, subscribed capital, and last one is subscribed and fully paid up. So in subscribed capital we have got 2 parts. One is subscribed and fully paid up, other one is subscribed and not fully paid up. In case of subscribed and fully paid up, how many shares were there? What was the area? You just find out the area. How many shares were there in area? कितना शेयर था? 100 इक्विटी शेयर्स था, राइट? मतलब how many equity shares we issued? 15,000. So if 100 is in area, that means 14,900 have fully paid. And in case of preference share, there were 200 preference share who did not pay. That means 9,800 has already paid, right? So that is a grouping you have to understand. So in subscribe capital, what are you getting? 14,900 amount of equity shares of 10 each. That is 1,49,000. And again 9,800 of 5% preference shares. Okay, 9,800 5% preference shares of 10 each, 98,000 rupees. These are those who have fully paid the amount, right? Yeah. Okay, so it is coming to 2,45,000. In addition to that, there was a group of some shareholders who have not paid one. In case of equity, there were 100 shares who has not paid the final call. So 100 equity shares of 10 each, 1,000 less the calls in area, so it comes to 750 rupees they have paid. And in case of the preference shares, there were 200 preference shares who did not pay. So there were 200 preference shares, 10 each, 2,000 rupees, less calls in area. Okay, less calls in area. How much? The calls in area is 500 rupees, and the amount comes to 1,500. After saying the amount, it comes to 2,49,250 rupees, right? This will be nothing but the balance of cash book also. Even if you see in the cash book also, you'll find it, the amount of money that we have received is 2,49,250, right? So it will come in the balance sheet. In the same way, shareholder note number 1, okay, under shareholders fund, share capital, note number 1, 2,49,250. We don't have anything else, so it will be a total of 2,49,250. The same amount we have received in the bank balance also, 2,49,250, right? 2,49,250. So this is the cash balance. It will come as like this: assets, under that current asset, okay, under that cash and cash equivalent. Note number 2, you can just mention here in the note number 2 what will be mentioned. If you don't mention, no problem. Here is not mentioned. It's something but a total. What is that? The total of the cash book, it's coming 2,49,500. Okay, 2,49,500, and the total of both the asset and the liability side is matching. Okay, just highlighting this heading. Okay, yeah. So this is how you are going to show a balance sheet, right? I hope all of you have understood it. Okay, this is the format you are going to follow. Okay, once you understand the format this much, that will be enough for this chapter. Okay, so this is a complete picture of this uh, company form of account. Okay, in shares. There are some more difficult sums we'll be starting, and we'll be learning about that in the subsequent classes. Okay, till then, take care of yourself, and take care of your studies. Do take care of your parents also. We'll be meeting in the next video. Till then, take care. Bye bye.